Commercial real estate is one of the best cash flow, equity building, wealth building, tax advantaged asset classes on planet Earth. Now, if you don't know what you're doing, commercial real estate can be confusing, it can be challenging, and oftentimes it can lead to some very big losses. But if you know what you're doing, it can also be the opposite. It can completely change your financial future, your family's wealth, your lifestyle, and it can create and unlock so much value. And as you guys have followed my real estate investing journey, many of you have been here from the beginning, which is kind of crazy. I've been in real estate since 2010. I started interning for a guy who was flipping houses off the courthouse steps. He showed me the ropes. I started flipping my own houses, started building my own single family rental portfolio. And I quickly learned that, you know, clipping a couple $100 a month on single family real estate, which back then, was easier to do. Today, really challenging to do. If I wanted to unlock real wealth and real cash flow, I was going to have to go into a strategy, into an asset class that better aligned with those goals. And that's what led me to buy my first shopping center, my first hotel, second, third, and really got me into understanding the game of value add commercial real estate. And as many of you have been following along with my journey, you guys know that I bought a shopping center, about a 65,000 square foot shopping center that was 30% occupied. Obviously, a major value add opportunity in a cool little town in Oklahoma. And I bought it because the basis at which I was getting it at was so low that I felt like, hey, I can't lose. And that being said, I also knew that there was a strategy and a business plan and a whole hell of a lot of work and money that was going to have to go into that to really take that valuation, that cash flow to the next level. And what many people don't understand is how much time and money and resources and stress and stamina go into executing on a game plan that can really break you through to a new level. And I want to share with you guys today some of the key lessons and also some key updates around what it took for me to land TJ Maxx, what it took for me to land Harbor Freight, what it took for me to get the city to give me, funds to help this project get to where it's at today, and share a little bit of that playbook, because I know whether it's on a shopping center, it's on an industrial property, it's on a mobile home park, it's any kind of value add opportunity. I think there are some key lessons in this journey that can be helpful for many of you who are looking at commercial real estate or maybe partnering with somebody in commercial real estate, that can make you that much more of a sound and dangerous real estate investor. Because, when most investors look at opportunities in real estate, they often just focus on the money. They focus on the hurdle and the big domino and the roadblock of getting all of the money figured out. And don't get me wrong, that is one domino in a very long path of dominoes that need to get lined up and knocked down for a successful investment. But what many people don't understand is it's oftentimes a lot of the things before and after the capital. It's the attorneys, it's the cities, it's the consultants, it's the tenants, it's the construction team, it is the property management team. And today I want to share with you a couple of the key lessons that I've learned in this deal, how I got it to come together, where it's at today, and have you guys follow along, because this has been a long time coming. Let's dive in on today's episode. What's going on, guys? Welcome back to the show. This has been, holy shit, I'll just say, this has been probably one of the biggest learning curves and greatest opportunities in my career. I bought this 65,000 square foot shopping center for basically $12 a square foot, which was lower than the cost of the land. And obviously there's a 65,000 square foot shopping center sitting on that land. So obviously a great deal, a great opportunity, but in a completely new market in Oklahoma, a market that I've never been in. And, while I've always been a believer of you make your money when you buy, you actualize it over time. This was one of those scenarios where I said, okay, $1 million, obviously a lot of money. Um, but I believe that there's a significant amount of upside in this project that I can go and capture. 30% occupancy, if I can fill that additional 70%, if I can bring in quality tenants, if I can get better leases in place, if I can convert them over to triple net leases and have the tenants sharing in taxes and insurance and, a lot of the other, maintenance items that go into managing this center, I can make some real, create some real value in the shopping center, drive up the income and cash flow, inflate the value, and really create some real equity, and also get some great tax advantages from this. So it felt like a no-brainer. And yet, oftentimes, we always underestimate the time, the money, and the amount of energy and effort that go into executing on a business plan, right? And you know what? Guess what? Of all the projects I've done, you would think I would have learned this lesson before. And of course, it took more money, it took more time, and it took a lot of energy and stress to get to where I'm at today. But this is also something that real estate is always a humbling and diligent reminder of that uh, it's a get rich slow game. But if you do it right, and if you do it with the right people and you have a good vision and you've got a good plan and you can execute, there is life changing opportunities in real estate, specifically, obviously, in commercial real estate that I believe and passionate about helping as many people unlock that for themselves as well. So I am proud to say that we are getting ready to close on the construction loan this coming week to start build outs for two national tenants that I've been going back and forth and working with for the last, call it 12 months, maybe even a little bit longer, going from LOI stages to lease negotiations to construction drawings, architects, engineers, you name it. And we're getting ready to start the build outs on their new spaces to come into my shopping center, which is obviously massive. They're going to be the two anchors. They are going to stabilize this shopping center. We are building, our tenant core up around them. And I figured I would walk you guys through a couple of the key lessons, really five, but, we'll call it, there's probably going to be a few others I sprinkle in there. Some lessons that I learned from this deal, from the city participating and getting them to contribute some money, to the national tenant process, to the team that has been vital to having my back and ensuring that we do this right. And honestly, just kind of the overall mindset that I've had to expand myself. I've done a variety of commercial real estate deals, dealing with 800-pound gorilla tenants that are publicly traded national tenants, are a little bit different than some of the other, mom and pop tenants I've been dealing with throughout my career in my other shopping centers. So a lot of lessons learned there. So let's go ahead and get into it. Let me set the stage first. Pirate Plaza is a 65,000 square foot retail shopping center that I acquired really with a clear thesis, right? My goal was I'm going to bring national anchor tenants into this asset. I'm going to stabilize this asset. I'm going to stabilize this income. I'm going to drive up the cash flow. I'm going to, optimize the operating expenses, and I'm going to drop as much net operating income to the bottom line. And through these quality tenants and leases that I stabilize into this center, I am going to bake in and inflate the value of this asset. So I'm going to increase the cash flow of this property. I'm going to increase the value of this property. And along the way, I'm going to leverage, the amazing tax benefits that come with owning commercial real estate, things like a cost seg, right? And so that was the plan. And that ultimately was what we dove right into day one. Now, of course, you can only move as fast as all of the parties in that vision are willing to move. And TJ Maxx, Harbor Freight, those big types of tenants don't necessarily move so fast. So the fact that I was able to bring them to the table, first and foremost, is started with getting connected into the community, finding the commercial contractor who does all of the work that was going to be required for tenants like this, knowing who was at the Chamber of Commerce, the head of the Economic Community Development, meeting the mayor, getting in contacts with the right banking relationships in town. These were things that in the very early stages were critical. You almost have to put on your political hat a little bit and really get entrenched into the community and understand what their goals are, what their gaps are, what their needs are, and also how we can find some collaborative synergy around what they need and what I need. And what I learned that they needed was that they wanted to bring in more national tenants into their community. And they want to drive tax dollars. They want to bring in more jobs because guess what? That benefits the community. That benefits the mayor. That benefits Chamber of Commerce and all of the goals that they're trying to accomplish. And guess what? I want to bring those tenants in because I want to stabilize my center. I want to stabilize the income. I want to increase the value. And I want to create a win-win for all of us. And this is ultimately what I was able to do because of the head of the Choctaw Nation, which is a big tribe that is out there in Oklahoma, their head of economic development, the mayor, and many of the amazing people at the Chamber of Commerce were the ones that actually put me in contact with TJ Maxx. I would have never known that they wanted to come into the center if it wasn't for those individuals. And these are national brands with real estate teams and attorneys and approval processes that oftentimes can take years. And they have been trying to court these tenants for years. And they needed a willing and able party that was willing to go through that process with them, to take that risk with them, because ultimately, I was going to spend time on attorneys, on construction drawings, on architects and engineers and all kinds of stuff without the guarantee that we were going to be able to come to an agreement and get this across the finish line. And so the fact that they put me in contact with them and I was able to work through that process obviously showed some trust. And that ultimately ended up being a major win for me to work through that. And I mean, I've been in this process long enough to, earn some scar tissue and some serious lessons. And here's where we're at today. We are closing on this construction loan. We are starting these build outs. And our target is to have these stores open and the center stabilized by Q2 of next year. So again, this has been a long journey, a year and a half process. And I still got obviously some work that still needs to get done. And this is a milestone, though, that I have been working toward for a long time. So I want to celebrate this. Obviously, you don't get too excited. There's still lots of work to be done. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position, asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. But I figured I wanted to document it publicly because I think this journey is valuable. It's just as valuable as the destination. And I know there's a lot of learning opportunities and lessons in this process that can help many of you on your commercial real estate projects or on your business vision that you're working towards, and understanding that as exciting as the finish line is, it's always the journey that ends up having the best teaching moments for us. And sometimes I just have to stop and quit sprinting towards the finish line and look up every once in a while and go, okay, what ground have I covered? And what lessons have I learned? And how can I use this to equip and arm me to be a little bit better in this next sprint? So this is ultimately just as much for you guys as it is for me. Before I get into the lessons, though, I want you to understand why commercial retail deals with national tenants are worth understanding. Even if, you're a residential investor or you're just getting started, national tenants are called credit tenants for a reason. They have investment grade balance sheets. They have investment grade credit and strength and value behind them. Why? Well, their leases are long. We're talking 10, sometimes 15. I mean, with some of the options of them being able to renew their leases once those initial 10 to 15-year terms, expire, they could have continuity of these leases for 25 to 30 years. And so when you think about the value of that, if you're an investor, to know that you've got a tenant that is going to be paying you for that long, and you've got a lease that guarantees that, and those tenants have a balance sheet with the amount of capital and strength behind them as a guarantee that no matter what goes down, you can rely on that income stream. That is a peace of mind and a value to anybody that owns those leases. And so when you think about, right, those leases and you think about their presence in a center and the foot traffic that it pulls to other tenants and the value it brings to other businesses around them, to the cities that are going to generate and participate in the tax revenues and provide jobs to their community. When you anchor a center with a TJ Maxx, right, or a Harbor Freight or another tenant that I'm working with right now, that, we still got a little bit of work to do, but fingers crossed I'm going to get them in there as my third anchor, which is Five Below. The value of that real estate asset goes up significantly. And you're not just filling space with a tenant, you are engineering a valuation event. And those types of tenants are the cream of the crop. Now, there's pros and cons to dealing with those individuals, which we'll talk about that. But, you know, those things matter when you're talking about really trying to maximize and optimize the highest and best use of a shopping center like the one that I have. So here's the numbers that matter. The difference between a stabilized center with national credit tenants and a half vacant center can sometimes be 2, 3, 4x difference in property value. Same building, but a different tenant profile. Completely different investment outcome when you look at that, right? So this is why sophisticated investors go and chase these deals. Now, this was the first big shopping center at this level that I've ever done with tenants like this. And it's also why most people never close on one, is because this process is hard, it's slow, and it's expensive. It's definitely expensive before it becomes lucrative. But I also knew that in my real estate investing journey, this was a risk and a journey and a path that I had to walk down if I really wanted to get to that next level with my cash flow and my wealth building. And maybe you feel like that at some stage in your journey right now. Maybe it's not, a shopping center with national tenants like this, but maybe there's something specific in your real estate investing journey or your business. Maybe it's something to do with your investing. I don't know. But you're feeling called to break through to a new level. And that's kind of where I felt in my real estate investing journey. If I'm going to really play at the level that I say I want to play at, I'm going to earn at the level I say I'm going to earn at. Just like when I first started off wholesaling, going, man, I want to make more and I want to build a bigger business. Well, I had to take that leap of faith and really challenge myself to take that next step into flipping. And when I said, hey, I want to earn more and start building real wealth, I said, I got to, not just flip houses. I got to figure out how to flip houses and build a portfolio that consistently grows and generates cash flow. And when I said I wanted to, really build to that next level, I took a risk and bought my first shopping center. When I wanted to build to that next level, I took my next risk and bought my first hotel, and then my second, and my third, right? And so this was another stepping stone for me, not only financially, but psychologically, skill-wise. And man, it's been a challenge in a way that has forced me to grow and expand my mindset, my skill set, my network. And I would be lying if I said it wasn't painful. And yet I know it's going to be one of the greatest ROIs that I get, not just from an investment standpoint, but because of who I become in that process. And so here is, number one lesson that I've taken away from this, which is your vision is your most valuable asset. The first lesson is the most underrated one. It might be the most cliche one, but your vision is a competitive advantage. If you have a vision and you feel called to take that next step in a direction that might be a little bit scary, might be a little bit out in front of your skis, might be something a little bit new or uncharted territory for you, but you have a vision for what it can look like, and you've got a plan, and you've got, a strategy, and you've got all the dominoes lined up, and you know that you've put in the work and you're willing to get after it, then you have to lean into that vision if you're really going to find a way to actualize it. And when I was looking at this property, the numbers didn't immediately work. The center needed tenants, it needed build out capital, it needed city cooperation, it needed the right deal structure. And none of that was in place when I committed to this thesis, but I could see what this center could be. I knew the market needed these tenants. I knew the city would benefit from it. I knew the real estate would perform if I executed on the plan. And I knew that if I got all the dominoes lined up, I could execute on this. And I held that vision when it would have been much easier to just pivot or bail or say, that doesn't feel safe enough for me. And that's something that all the big risk takers end up getting the big rewards when they believe in their vision. The conviction that it takes when things are rocky, when they're not 100% guaranteed, that's usually when people pull the ripcord on the parachute and they bail out. And this for me has been one of those trying times to say, do you believe in this or not? Do you believe in your vision or not? And without that, you know, um, I don't think I know for a fact I wouldn't be where I'm at right now. So here's a quick little analogy, right? To kind of carry vision in real estate is like architectural blueprints. Nobody builds a skyscraper without those, right? And yet most investors make decisions purely based on what exists today, not what they can build. The investors who win at the highest level are ones who see the blueprint before the building actually exists. And guess what? Because of that vision, they go out and execute, they bring it to life. And that's something that ultimately anybody can apply to anything that you want to see come to fruition in your own world. Now, lesson number two is more around the types of tenants in this particular deal. National tenants don't work the way you think. This is a lesson that I just believe will save, someone watching this a lot of pain. The glitz and the glam that comes with having them there, once they're there, it's like, oh, they must be amazing to work with. But what I can tell you is landing a national tenant is not like landing a local nail salon or a regional retailer. These companies have entire real estate departments. They've got multiple attorneys on staff. They have site criteria binders. They have approval committees. And guess what? They're not in a hurry because they don't have to be, right? I think I was like one of 180 stores that are opening up this year. So I'm just, a little dot on their dot plot. And the mistake that most commercial investors make is they don't know the language, they don't know the process, and they don't really have any leverage. And I had to learn that the hard way. You need to know, you know, what some of these clauses are. You need to know how some of these provisions work. You need to know what to build into your leases and how to protect you. And going from a 10 or 12 page lease like I normally have to a 100-page lease, that was hard. That was a lot of learning and a lot of diligence, and yet it made me so much more dangerous as a real estate investor as a result of it. So applying that into your own world, right, of just knowing that dealing with bigger, smarter, wiser, more capitalized people is going to be a challenging learning curve, but it's going to be something that serves you and provides an ROI for you. So don't lay down and don't shy away from those opportunities. Yeah, I've been very uncomfortable in this process. But that being said, this is exactly where having the right team comes into place, right? Having the right attorneys, the right and consultants made a massive difference for me. They were expensive, but man, did I learn a ton in the process. They knew how to protect me. They knew what to push back on. And there were specific moments in this deal where without the expertise in my corner, I would have left money on the table. I would have signed something and that would have hurt me long term. So, just key lesson here, do not negotiate with national tenants, or really just do not negotiate with people who are wiser, smarter, more experienced, more capitalized than you, without people in your corner who have already done it before, who have already dealt with those kind of people. The cost of the right advisor is a rounding error compared to the cost of a bad lease or a bad deal or a bad outcome, right? So just keep that in mind. Lesson number 3 is the importance of kind of politicking. The city is a partner of mine now. They have become a capital source. And many people don't necessarily get to tap into these types of opportunities if you're not thinking about how they are a part of your team. Many people think that you got to work against them, that you got to outsmart them. And if anything, you got to communicate with them. You got to work with them because this is something that could change your deal. I got to give a big shout out to Poto, Oklahoma. I mean, their mayor, their city council, their head of economic development, their chamber of commerce, they have been a breath of fresh air and really felt like team members and partners in this whole process. They helped me secure a forgivable loan that meaningfully improved the economics of this project in areas that I maybe was going to get squeezed and unable to make this work. They were able to provide capital that allowed this deal to work.
Here's the thing about most investors right now. They're consuming a ton of content, but they're not actually more informed. They're reading all the headlines, they're watching the tickers, they're following all the noise that mainstream media wants you to follow. And at the end of the day, you're still not informed on what it actually means for your deals, for your portfolio, or for your next move. So if you're listening to this right now, I don't think that's you. I think that you actually want to understand what's happening, how it impacts your investments, what you should be doing going forward, what you shouldn't be, and not just reading about it. That's why I decided to build the Wealth Intelligence Brief, a newsletter sent to you 3 times a week directly to your inbox where we cut through the noise. We send you the macro data, the real estate intel, crypto signals, and all the unfiltered takes in 5 minutes or less for free. Eliminate the noise, keep the edge. Sign up by texting the word WIB to 844-447-1555. That's WIB to 844-447-1555.
And so this is something that, will this always happen on every deal? No, right? But just thinking about how these cities that you're investing in, they have economic development budgets. They have tools like forgivable loans or tax increment financing, incentive programs, infrastructure support. I mean, there's all kinds of different things that these cities have that they want to put in place for a reason to help people like you make a deal work that's going to benefit them, their city, their citizens, the people that are parking capital there. And most real estate investors have no idea that these tools exist, let alone how to access them. So before you close on your next commercial deal, have a conversation with the economic development office in that city, right? Know what you're bringing to the table, economically, what value based on the risk you're taking, whether you're bringing jobs, you're bringing a tax base, you're bringing revitalization to some ugly property that's been bothering them or creating havoc in their city for some time, right? Bring that case to them. Tell them your vision, show them your story. You might be surprised what they put on the table, because I know I was. Next is stamina and risk capital. Those are the real moat around deals that I believe succeed, and the difference between the ones that don't. Because I want to be honest with you about this. The deal was way longer than I thought it was going to take. It was not fast. It was not easy. And there were real dollars at risk for a long period of time before this loan closes and before these stores open. And that is the nature of high quality commercial deals, right? I mean, here is why that's actually good news if you have the stomach for it. The harder the deal, the fewer people you're going to be competing against. Most investors shied away from this opportunity. Now I've got a lot of people that are going, man, I can't believe you made that work. Oh my gosh, right? Now, but in the process, people are like, I don't know, right? And a lot of people are like, oh, I stayed away from that for a reason, or you're bold for taking that risk. Well, you know what? Most investors get shaken out by complexity, by timelines, by capital requirements. And that means that the deals that require real stamina and real risk capital are also the deals with the most upside and the least competition at the finish line. So this was one of those deals that required me to have patient capital, discipline, and just overall conviction in my vision. But that being said, these are the deals, the ones that are the marathons, right? Because most people don't want to run marathons. You get me sprinting across the field, I'm good. You tell me I got to run 23 point, however many miles on a marathon, I'm like, I think I'm good. I'll just run on the treadmill for a little bit in the gym, right? Well, that's the same thing for investors. Investors who close deals like this are the ones who trained, who built the capital, built the team, built the relationships before they needed them. So just keep that in mind, right? If a deal is hard, don't assume it's wrong. Just ask yourself whether it's hard because it's broken and it really won't work, or if it's hard because it requires more than what most people are willing to give. Those situations are very different situations and something to keep in mind. Now, last, I'll say, the right team, as I mentioned earlier, is a force multiplier. This might be the most tactical lesson of all, and it's one that I feel deeply convicted about because I lived it. This deal wouldn't be where it's at today if it wasn't for the team. I'm not the smartest dude. I'm not the sharpest tool in the, in the toolbox. Um, I've got a lot of smart people around me and a lot of sharp tools around me. And these are things that allowed this deal to be successful up until this point. On a deal of this complexity, when you're talking about national tenants, city negotiations, construction financing, lease structuring, you cannot be the expert in everything. You just need to have a team that is in those individual regards. And not just warm bodies, not somebody with a title. You need the right people. And so for me, that meant a retail leasing attorney that has done specifically TJ Maxx and Harbor Freight leases before, a consultant who has worked specifically in public-private partnerships with cities, a lender who understood working and funding construction build-outs for these types of national tenants. A city relationship that took me time to build. These were all things that if you're going to get comfortable investing in your own market or let alone in another state like I did on this project, you really want to keep these things in mind. But each one of those pieces either protected me or unlocked something that I couldn't have accessed alone. One of the quotes that I always keep coming back to is like, you are the average of the 5 people you spend the most time with. But in business, you are also the average of the 5 advisors that you hire. So it's not just about your personal circle, it's also about your business circle. And sometimes you got to pay the best to get in those circles. So upgrade your circle, upgrade your outcomes. Now, just wrapping this all up, the biggest thing I think I underestimated was time. Complexity, yes, but time. These deals live on their own schedule. There's a lot of hurry up and wait. You can push the ball forward so far, and then it goes into somebody else's court, and you just got to wait, right? So that was one of the biggest challenges for sure. City approval processes, construction timelines. But the investor who wins is the one who plans for twice as long and keeps executing anyways. And I think the biggest thing that I'm proud of is just continuing to hold this vision. I wouldn't be able to do it without my amazing team in my office every single day. Shout out to Sonia, my mom, who works with me. She has been the glue to everything. So I love you, Mom. You're the best. Yuli, Roger, Anthony, all the people that have been, critical to this process. We still got work to do, but I figured going to keep you guys posted and would love for you to follow along. So I'm going to be posting a lot more on X, on the YouTube, on my Facebook and Instagram. So be sure to follow me on there. If you have any questions, shoot them over. 844-447-1555. As always, keep investing in yourself and your wealth on your march to $1 million and beyond. I'll see you next episode.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.